Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. And before I get to it, if you're watching this on YouTube, please click the link in the corner there and subscribe. Like and subscribe. And if you're watching on our website, there's a link below to direct you to YouTube, and you can subscribe that way. We'd love for you to follow us. We'd love for you to help us build our following. All right, we have another battle here in markets. You have the S&P trading higher off those overnight lows. It held the previous low from last Thursday by a point, and that's right in front of a 20% correction. You have the Nasdaq holding last week's low as well, and that's right at that 50% retracement on the whole pandemic move. However, the Dow did make a new low on swing low, taking out last week's low. I highlighted some of that in the Morning Express. Check it out. But overall, we have this move higher here after the bell, and it's starting to get a little near-term exhaustion here now. Major three-star resistance in the S&P was pinged, 39.22 to 39.30. Got its nose above there, but it's falling back. You want to see this thing kind of hold in. I mean, it really needs to hold out above 38.85, 38.89, and respond to that. What you don't want to see is a move that gets below 38.74, that opening bell range. Same thing, 11,800, and in the Nasdaq, you don't want to see new intraday lows on the session, because that opens the door to retest those overnight lows, and they're not going to. They're unlikely to hold. At least another test again in this again short period of time, and that would be sort of another third prong against that. Now to the upside again, I highlighted the S&P levels. We have 4 layers of major three-star resistance in the Nasdaq because of yesterday's damage, and we got through the first, and it really tested the second before stalling out. Check it out. It's on the Morning Express. However, it's not all doom and gloom. I mean, you got some bright stuff going on here in commodities right now. Crude oil responded against support. It was the 618 retracement from that recent high, about 113 down to 96. That was right there at 103 and a quarter. It held that. Markets responding, moving back up. Really nice tail on crude. Shows some resilience in that market, and we continue to like it. I've highlighted, we're bullish. We're cautiously bullish because the volatility is so high, but we like crude oil. And then looking at the metals down the road, I mean, this is a bigger story here. You're seeing the dollar having a little bit of a head and shoulders topping pattern. That's the dollar index. You have the same pattern developing as an inverse head and shoulders bottoming pattern in the Japanese yen, as well as the 10-year note futures, and that's all supportive to gold. Gold basically has the same pattern. They're all building these inverse head and shoulders, and the dollar is the head and shoulder topping pattern. So gold's moved off of this that low from last week very well. We've moved into actually making a new swing high on the week. Remember, we traded higher early in the week. We fell back sharply. Now we've taken that out. We're moving out in front of 1835, out above 1835. That's good. It paves the way. I talked about where that opens the door to. I talked about in the Morning Express. Check it out. For silver as well. Platinum's moving. And then in another one where you have this inverse head and shoulders bottoming pattern is copper. Copper moving out really well. If copper can really get out, about 430, we could start to run a little bit. But I think it's in that space across the dollar, the yen, the treasury market, as well as these metals. There is a clear pattern taking place, and it's just broadly across them all. So there's definitely some opportunity there. Give us a call. We'd love to talk to you about it. 312-278-0500. Remember, futures trading involves substantial risk of loss. It's not suitable for all investors.